Who?
Florence?
Unfortunately. I'm going to let you go.
Okay. All right. We'll talk later.
Bye-bye.
Happy birthday.
Yep,
Bye.
thank you.
Bye.
I can't believe you froze on me this morning. I hope I don't have that kind of day today. I don't want it to happen on my birthday. It's now 15 after 8. Down here. Yeah, I think it's going to be one of them days.
$104. And you said that their year revenue outlook was like 17% or something. It's going to be a little bit of a slowdown from this quarter because they were still growing at almost like 30%. So I guess to some extent it's kind of weird that it looks like their short-term pop might have lost a little bit of momentum, just like in the rate of change. Still double digits though, to your point.
Double digits. So I mean, I guess I was surprised at this stark of a sell-off. I guess we were
Annette.
slightly, but I mean, we did also close up higher yesterday by about 3.5%. So maybe just some of that positive momentum had already been somewhat priced in because. Yeah, you have to basically say this report was a miss as far as expectations, but there was nothing to signal that this company is substantially slowing down. Sure, yes, that pace of full-year revenue growth is coming down, but I feel like that's the case for every company we look at right now in AI.
Yeah, fair enough. All right. So a little pressure on both our main earnings.
She's disappointed.
Thanks, Jenny. Appreciate that. Helping explain why futures are off a little bit here as we go into the opening bell. We got about 14 minutes. We're going to come back, talk some macro, talk some minutes speculation, how that fits into the strategy for capitalizing on stocks at all-time highs, though pulling back a little bit here this morning after putting in a record for the S&P 500 index yesterday. Be right back.
Do. And he's back.
Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Welcome back to Morning Trade Live. We've got some time here until the bell, about 10 minutes. The futures off a little bit after putting in fresh records yesterday. Adam Coons joins us, Co-Chief Investment Officer at Winthrop Capital Management. Adam, that's a winter time framing you have there. Good to see you this morning.
Good to see you. Yes, it is. Very, very cold.
Yeah, same here in Chicago. We had some negative prints yesterday. Stock market pretty positive, though, with a fresh record yesterday. Into the closing bell, we managed to get there. What'd you think?
Yeah, I mean, look, this is a market that just seems to never want to stop. And I'm surprised mostly that we're just not seeing more volatility around, some of the policy changes coming out of Washington. It seems like the market's really digesting that quite well. So
We are, because we love them. It's the old policies that sucked. The over-regulations, the high inflation, the wars.
What do you think we should do about it? Just
The human trafficking.
Doing a good enough job powering the S&P, or should we be getting in there trying to trade short to intermediate term stuff with all of the headline news around tariffs and more?
yeah, I mean, I think trying to have a crystal ball around what this administration is going to do with tariffs and kind of other changes is a difficult game to play. I wouldn't really recommend it. I think what you really want to pay attention to, if you're looking for short-term or intermediate plays, are where you're finding better value. I don't think you want to chase names, just because there's tremendous momentum. I don't think you want to chase that right now. I do think you want to start to take some chips off the table. I mean, don't forget 2023 and 24 were over 20% return years for large cap equities, and I think it's going to be difficult to continue that for the entire year, given where valuations are right now. I don't like to get too caught up in a multiple, but eventually it does come to be important. And so I think when it is important is when you start to see kind of uncertainty grow. And I still think that there are high likelihood possibilities that we will see some things come to the market that just weren't foreseen, weren't forecasted. And so when you see that uncertainty pick up, that's when you'll see valuations matter. And I think that is probably what we're going to see in the back half of this year.
So the back half kind of limits our overall potential.
Right down at 609.50.
Ballast within the portfolio, or putting on some kind of hedges, or is this potential type of volatility you see still too far in the future?
No, I think you want to start building it now. I mean, you're never going to get the timing exactly right. And so I think looking, for us, we're looking at higher dividend paying.
609.62.
From a, overall asset allocation standpoint, we are overweight fixed income. And so a similar way to play that would be your, high dividend utility stocks and REITs, looking where if we saw interest rates come down, and that is what we're predicting, is that interest rates on the long end of the curve will come down in the back half of the year as inflation subsides. I think that's a way to play defense in equities but still participate if this momentum continues. So like I said, we're not trying to time it too much. We're just more kind of moving more defensively, looking at lower beta names, looking at those kind of higher quality, low lever type names within the equity markets, rather than your high beta growth names. I think right now is the time to start that pivot.
Okay. The confidence about inflation coming down in the second half, Adam, where does that come from? And Tell me the logic behind it. Obviously, we had a couple warm prints most recently.
We have 6 more minutes left.
Yeah, so I think if you kind of look at the trajectory of inflation over the last couple of years, and then you embed tariffs, I think a lot of people have tariffs wrong. I don't think that they're
Exactly.
necessarily
I don't.
inflationary, because you'll hear sometimes, the remedy
He's right. He's right.
aren't just going to be able to continue to spend because products are 25% higher in cost. What they're going to do is they're going to have to make more choices. And I think overall, that combined with, you are starting to see, job cuts. Obviously, we're seeing on the public sector, they're cutting jobs. You're seeing this push towards working from the office. And if you don't want to show up, then you're going to lose your job. And so what I'm thinking that we're going to see in the next couple job prints are weaker than expected jobs, and then that'll start to flow into lower spending in the back half of the year. That's why I think you'll start to see that kind of really play out.
Not again. No. Fuck. This is not good. Oh, God. Not again. It is cold here in the weather, but man, dadgummit. Can't be doing this to me again. I got 4 minutes to. Here I go again. This is the second time today. Shit.